Hello everyone. First of all, we want to thank you for taking the time to join us for the launch of our Insurtech Global Outlook 2021 report. I'm Naoki Mori, Head of Insurance from NTT Data Corporation, and I am a Senior Vice President, one of NTT Data Executive Officers. NTT Data is a trusted global innovator of IT and business services headquartered in Tokyo, and the sixth leading ICT service company in the world. NTT Data is a part of the NTT Group and counts with over 130,000 professionals in more than 50 countries and regions. Thanks to our extensive knowledge and expertise, our proven methodologies and execution processes, we have established our leadership in the marketplace. We help clients transform through consulting, industry solutions, business process services, digital and IT modernization, and managed services. At NTT Data, we aim to enable both companies as well as society to move confidently into the digital future. Going back to our commitment to innovation that I mentioned earlier, today we want to share with you our Insurtech Global Outlook 2020 report, which analyzes the trend and impact of Insurtech in the insurance industry from different perspectives. In this year's edition, the fifth one of our annual publications, we analyze in depth the current trend which in some cases come as a result of the COVID-19 pandemic. In it, we have explored the following main topics: the acceleration of digital transformation, the emergence of new insurance business models, the new deconstructed value chain, and the insurance investment in the insurance ecosystem on basis of technology application. I would now like to give the floor to Bruno Avril, partner NTT Data EMEA Insurance, who will take us through the report main findings. Bruno will also give us more details on how we organize this launch and how we even involve our clients and ask them to share their point of view on some incidents and current topics related to insurance and Insurtech. Hello, Bruno. What can you tell us about the new edition of the Insurtech Global Outlook 2021?
Thank you very much, Mori-san. Thank you for being with us today. This year, we have interesting conclusions to share, and we also want to involve some of our clients, partners, insurance companies, Insurtechs, and experts from the insurance industry in this presentation. We firmly believe that we have all to contribute with ideas and value approaches to better understand what is happening around our industry and how their startups, the Insurtechs, help us innovate and ultimately to offer added value to better products and services to those insured. As you have already anticipated in your introduction, this is the fifth edition of this report. So we have gathered extensive knowledge on this subject. In addition, we are now able to see the evolution of what is happening with some perspective. And we would like to add that this report you can read in different formats, web and PDF, for which we have prepared different levels of depth: report, executive summary, and documents with interviews with executives of important insurance companies. Now I would like to welcome Carlos Ordóñez, Global Head of Digital Insurance, who is leading the research and the publication of this annual report. Hi, Carlos.
Hi, Bruno. Thank you for the invitation.
Before we get started, I would like to thank everybody who participated in this release. First of all, to the executives and experts who joined us in the roundtables we organized to dive into each of the main topics. We also want to thank all the teams that were involved in the production of this report. The global NTT Data team that has made this report possible for the fifth consecutive year. Before starting with the analysis of the report, I want to announce that in the upcoming weeks, we will be releasing conversations around the 5 key insights that are of great interest and use to the insurance company executives, but also to the Insurtechs and other relevant players in our industry. Now we can start, Carlos. How does this report fit into our vision of the liquid ecosystems?
Thank you, Bruno. As we commented in our previous sessions, we introduced the concept of insurance liquid ecosystem, where insurance are in the middle of the fourth main ecosystem of our customers: smart mobility, healthy living, home safe home, or business shared. An important topic of this presentation is what we call the four forces of acceleration. These forces are pushing pressure in these ecosystems to create innovation and disruption. Insurtech, the insurers with their garages, or the new entrants are the new forces that are creating the new disruption in the insurance sector. This report is basically our view of how these forces are impacting in our insurance sector.
What was the volume of investment during 2020?
This year, the total volume amount of funding in the Insurtech sector was $6 billion. We have seen a little decrease of number of deals, where we are rising the 277 deals this year. In terms of deals, the average amount of funding this year is $33 million, including the impact of the COVID-19. An important topic that we see is that the Q4 is the higher historical average per deal this year. Then we can predict that next year will be a great year in terms of funding. Also this year, we see a new topic, that is the IPOs. Some of the biggest insurtechs has announced an IPO this year. Root or Lemonade are two examples of companies that raised $1 billion this year on IPOs. Then we can say that the total amount of funding this year was $7 billion in total. We have seen that some important insurtechs has announced a new IPO for 2021. Oscar, IPO, or Metromile are some examples of them. When we see the investment market share this year, US is continuing having a biggest amount comparing with the rest of the markets, but it's stable. Europe is stick since 2017 in the number of investment. And we have seen how Asia is growing in their market investment.
Impressive figures. Based on the volume of investments, do we see any differences?
Yeah, in terms of type of investment, we have what we call three different types of investment found. We have the outliers, that is the biggest investment, normally more than $100 million in total funding. Then we have the standard ones, that is between, in the middle, is from 100K euros to 100 millions, is basically the mean startups. And then we have the initial stages. Focusing on outliers, we can say that 6% of the total outliers companies concentrate 70% of the total funding. The average deal size is $62 million. ACO, Digit, or Oscar are some examples of them. Inside of the outliers, we can see some clusters. We continue with the cluster of previous years, like American Pioneers. We have seen how we have the European followers, that is basically copying the same line of business that the American Pioneers is launching. Or we have seen a big cluster of Medicare. This year, we have found 3 new clusters in outliers. Asian Giants is growing rapidly. Cybersecurity and fraud is a new important cluster that is appearing. And now we have what we call the non-traditional insurance business. Peer-to-peer, micro-insurance, or insurance on demand is the new cluster that we are seeing in outliers. Talking about standards insurtechs, we have a big volume of them. 84% of the total amount of insurtech are in the standard session. But just 29% of the total funding is produced by these insurtechs. The average total funding per insurtech in this space is $2.7 million. YOLO, Anorak are some of the examples that we can find in the standards. In terms of investment, we have seen that Europe is the leader region, followed by the US, who are investing in this type of Insurtechs. We have some Insurtechs per technology that they are found. You can find here examples like dynamic pricing, risk profiling, or basically chatbot or smart chain management. Also, we have new business models behind that, like dental insurance, peer-to-peer for bicycles, or the new ways of distribution like YOLO is producing today.
Very interesting findings, Carlos. When it comes to technologies or lines of business, what can we say about this concentration on investments?
In terms of investment by technology, we can say that first of them, it's cloud and mobility. Basically, the customer wants the service in their pocket. The second one is artificial intelligence. We need a more intelligent solution that implements new added value for the end customer. And finally, we have some differences between outliers and standards. Outliers are more focused on IoT technologies. Companies like Root are examples of them. And standards is more focusing on big data and backend solution, some solution that can do disruption in the value chain. When we talk about investment per line of business, we can see basically that health is the key topic. Health and Asia will be the growing in the coming years. Also, cross technologies, mainly for distribution or products for companies, for B2B, will be a trendy in the future.
Let's focus on these outliers that concentrate most of the investments. How are they really impacting the industry?
This is a really good question. Here we have that we call the disruption dilemma, because these new outliers are growing a lot in the previous years. They are duplicating their revenue per year. For example, Lemonade or Root, they are multiplying per 10 in the last 3 years. Then we can say that they are impacting a lot. But the reality, when we see the volume that they are producing, they are not too high. Just Lemonade is today have a revenue around $100 million. That is not too much. It's 0.1% of the market share in the US. That is not too much. For example, Root, that is a new way to do underwriting in pay-per-use. They have a loss ratio that is around 100%, when normally the average is from 40 to 60 in the market. Then we can say that they are growing, the market are interesting of them, but the impact, the real impact in short term in that market is not too much. They need to improve a little bit.
Interesting. So we have seen the investments that have been made in the Insurtech ecosystem. But what are the insurance companies investing in? Yeah,
from the insurance point of view, we have seen that the sector has invested more or less $1.6 billion. And the main part of this investment, 62%, are not invested in the Insurtech. They are investing more outside of the Insurtech, in some startups that complement their services with the insurer, but not exactly in the Insurtech. Why? Because they want to expand the services that they are offering to their customers, these customers that are in these liquid ecosystems, and they need to complement the offering with new things. And the more rapid way to do that is integrating these new services from the startups. When we see the total amount of the investment from the insurer point of view, we have seen also that 80% of the total funding is coming from Asia. And 90% of this total funding is coming from Japan. Then we can say that 70% of the total funding is coming from Japan, and Japan is investing basically in startups from the US. Then they are concentrating a big part of the investment. This is a key trend that we have seen now in our numbers. And also what we have seen is that 74% of the total amount is in companies that are growing, that are mature. The sector, that is a traditional one, they are not investing in pre-seed, at the beginning of the investment funds. They are going to consolidate startups that they are creating value, because they need this value to complement with their insurance services. When we have seen how the insurers and the new entrants like tech giants are going together to these startups, we have seen that the main part of the investment is going to the USA. The second one is going to India. India is a new market, is a new trend. And the third is China. Then we need to keep attention on India and China in terms of what is happening there. We have seen an example of like a Munich Re with Bought by Many, or how Amazon and Munich Re is going together with ACO in Asia. We have seen how the insurers and these tech giants are investing in 9 of the 20 top outliers Insurtechs. When we see that in terms of new emerging markets, we have seen that India, as I said, is a new trending, but basically they are focusing on distribution. They are trying to find new Insurtechs that they are doing disruption in India because they have a massive market, and then they need a new ways to distribute in their markets. Also in China, they are more focusing in health, as we said, in platforms. That Tencent, for example, is an active tech giant investing in our sector. And then we have Indonesia. When in Indonesia, we have seen new products, these micro-insurance, these comparisons platforms that today is doing new disruption in that market. In terms of deals, we have said that in terms of investment from the insurer point of view, 74% of the total investment are in standards. The insurers are not investing in outliers as the new entrants, as the investors. Why? Because basically they are seeing this investing on standards as a quick way to disrupt in their value chain. Also, we have seen that the main investment in these standard insurtechs are coming from European insurers. Then we can say that European insurers mainly are investing in these standard insurtechs that will disrupt the value chain of the insurance sector in the future. AXA, for example, it's a European company that has leading some of these investment in standard insurtech. And here we can see some examples of how insurers are doing these investments. We have the example of AXA Venture with Troy, or we have Zurich with Dentalo, or one others. Then, if we summarize what is the trending today in terms from insurer point of view, in terms of investment, we have said that American and Asia insurers are more focusing on new disruptive business model, new end-to-end, more outliers things. European insurers are more focusing on standards, as we said before, and they are more focusing on value chain disruptors. We have seen that these unicorns are growing really fast, but maybe the impact on the market is not too high as expected. And finally, the tech giants are focusing on innovative tech startups and also innovative and disruptive new business models. These new business models normally are produced by these outliers insurtechs. This is because the tech giants are more focusing on the outliers, insurers and Europeans more in standards.
So very interesting. Last year, we introduced the concept of liquid insurance ecosystems, and we explained how we believe businesses are increasingly more blurred, making way to these ecosystems. What happens in terms of investments, Insurtechs in these ecosystems?
Before we start in deeply on the numbers, I want to do two concepts inside of the liquid ecosystem. One, what we call the leaders of the ecosystem. We need to understand who is leading or will lead in the future of this ecosystem. And the second one is how the insurers are connected to the ecosystem, what we call insurance ecosystem ready. And now I want to show you different examples of the both topics. Talking about how they are leading that ecosystem, we have two types of leaders, what we call the industry giants. It's a vertical giant like Tesla, for example, where basically are top players in a specific line of business, or what we call platform giants, top players in platform economy, like WeChat, for example, in Asia, or Amazon in the US. Talking about these two, we need to see that they have some differences. In terms of methodology, the industry giants are more integrating more added value services on that. But the platform giants are more adding additional services on top. The industry giants are more focusing on brand loyalty, but the platform giants are more a one-stop convenience. They are standardizing the insurance products to be served to their customers. And basically, how we can take action of that, how we can, how we can learn from that point of view. Basically, the insurers need to participate in the ecosystem of the tech giants, or we need to take that platforms as an important distributor channel. In both cases, we need to gain data and insights from the customer that these industry giants or platform giants can produce, and we can learn from that. And basically, gaining this data, we can be focusing on the strategy of products of specialization. We need to understand this micro segmentation of the customer that they can provide to you. And then we need to adapt our products to be sure that we can serve in a better way to these kind of customers. Another concept is what we call the insurer ecosystem ready. And I want to show you a real example of how a company, in this case an Asian one, is really doing a transformation of themselves to become a pure ecosystem ready insurer. The case of Ping An is a real case that we need, or interesting case that we can see in detail. Ping An has transformed from a pure insurer, a traditional insurer in China, in Asia, and now it's more a software company. It's a company that with hundreds of millions of customers that they have produced a layer of important data. Today they are a really data-driven company. They are basically transformed their company from pure insurer, as I said, to software. Today they have more than 110,000 development teams. Also in terms of data management, they have more than 3,000 data scientists in their company. And then they are extracting the knowledge and insights from this data, and they are producing new business models that they are launching to the market. Also, they have created just this year more than 4,600 patterns. And this is interesting because from previous years, no one was talking about patents in terms of insurance. But everybody is talking about patents in terms of IT or technological companies. And then Ping An today, it's this kind of companies that now is closer to a tech giant than just an insurer. Today, Ping An is serving with their platform or technological platform today more than 600 banks. Also, they are providing services to another insurers, and then they are providing these data and services to more than 100 insurers. And also, they are connected to local governments in more than 118 cities. Today, by the market is perceived as a really software as a service model. And it's a key player in the smart city ecosystem. And finally, in terms of technology, they are encapsulating all their value and their knowledge in AI tools that they are providing new business models to business units. Also, they are creating a new credit risk model that the market is reusing to integrate in that ecosystem the insurance products. And also all the services is focusing on cloud computing and is big scaling.
Very interesting case to better understand the ecosystems concept. When it comes to the quantitative part of these investments within the ecosystems, what can we say, Carlos?
Basically, what the numbers is showing this year is that we continue with the trend of healthy living, and health is today is an important trend that will grow in the coming years. Then we have today $2 billion investment on healthy. Second one is B2B, Business Shield. We have seen that today the market needs new services for small and medium companies. And here we have $1.2 billion of investment. Then with the pandemic and the COVID, we have seen that home safe home and how we are serving our customer at home or at work. Today is a trend, and the investment today is going to this kind of companies like Hypo. And for smart mobility today is concentrating on autonomous car, on smart cities. And today the insurance sector is perceiving that they can serve to this ecosystem, but through this industry giant that we saw before, like Tesla. Talking about smart mobility, we can say the micromobility is today a key topic. Also, UBI, telematics, and fleet management will be a trend in this ecosystem. Tech giants are taking a position on that ecosystem because they see themselves as a future leader of that ecosystem. Also, the Chinese tech giants are focusing on software for this autonomous car or smart cities. And then we see some examples of how today the big technological companies are creating new innovative things on that ecosystems. Talking about healthy living, we have seen that we have a convergence between life and health. These two lines of business are going together, creating new products from life point of view that they need health for prevention or health prevention complementary with their life products. COVID-19 has accelerated this line of business, as you know, approximately duplicating the total investment comparing with last year. We have new entrants in this ecosystem. We have seen a lot of new appetite from the external market, from the insurers, where tech giants, telco, pharmas are these new entrants that they want to position themselves as a leader in that ecosystem. Inside of our report, you can see a lot of examples from Europe, USA, China, how they are creating this disruption in this new ecosystem. In terms of number, we have moved from this 2.7 last year, and this year we are moving to $5 billion of investment in just healthy living. In terms of home safe home, we can say that the introduction of the IoT and smart devices is a key trending. This data is providing us the opportunity to do a hyper-personalization of our products to our customers. Doing intelligent underwriting that can protect better in a more accurate way to the needs of that customers at home or at work. Here we can see an important investment from the tech giants. Here we have the example, for example, of Google that is investing in several Insurtechs where they are mixing Next with Lemonade and other companies because they see appetite on our sector. In terms of B2B, Business Shield, we have seen that this is, as we say before, it's a market that is growing a lot, and it's an important one. Basically, because SME, the small companies, needs better insurance products. They need protection. They need protection in terms of cybersecurity. Here we see a lot of opportunity for fraud. How we can find smart brokerage platforms that can cover to these kind of ecosystems. Today, the example of Next with Amazon, that they have raised more than $600 million, is an important funding that we have seen on the market.
Very interesting. So we have seen that insurers mainly invest in standards because they leverage them in order to create disruption in their value chain. So when it comes to the value chain itself, what can we say about the trends in terms of investment?
In terms of value chain disruption or fragmentation, we can say that digitization and data are the two main technologies that have favored the arrival of new business models based on platforms and marketplaces. We can say that the value chain has been deconstructed and it's not a linear process anymore. When we talk about value chain fragmentation, we can say that Insurtech are basically producing two things. Or they are doing or producing new distribution models where they are creating new adjustments in real time, tracking sales. They are helping the insurer to distribute better. Or they are creating and providing new technologies for them. Artificial intelligence are an example of how they are creating new technology services that can improve the process of the insurance sector. When we talk about, for example, product design as part of the value chain, we can say that from the COVID-19 has accelerated the IoT adoption in all industries, and the application of predictive models is one of the trending things. There are also an entry of the new hyper-personalization data-driven products. They are creating new products really adapted to the needs of the customer. And these needs are produced by the data that the ecosystems is giving to the insurers. Here we have examples of a singular health insurance like YOLO, for example. Then we can see like cybersecurity or micro insurance is a new trending on the gig economy. And some technological startups and insurtechs are providing new services on this part of the value chain. When we talk about marketing and distribution, we can say that hybrid distribution with omni-channel strategy is the main trend on marketing and distribution chain. Insurers also expand the reach of distribution, which reflects a market consolidation. Here, hybrid distribution for SME is an example how the digital brokers are today impacting on the value chain, how they are expanding the reach of distribution in home and life, or how they are embedding the microinsurance in emerging markets. Here, ACO is a key example that we can see in detail. When we talk about underwriting, dynamic pricing and uncovered risk are a key trending. The data not only allows the insurers a more accurate and customized offering, but also new transparent, flexible and universal policies is something that is providing these insurtechs. Pay-as-you-go, platform for connected cars, wellness, benefits, and simple insurance for employees are new trends, or how parametric insurance are covering smarter insurance are new clusters of insurtechs that we can see in this part of the value chain. In claim management, we have seen that artificial intelligence is a key topic. The adoption of these emerging technologies is allowing companies to move from automatizing simple and inefficient models to a more complex and dynamic models, improving their operational efficiency, preventing frauds, and enhancing the customer experience related to claims. How sensors and image recognition are helping on claim management, how solutions about accidents and disasters detection, or how we can do prevention around fraud, like Clara technologies today, are today new trends on claim management. All that is that we have seen in terms of value chain distribution. If you want to see more in details which insurtechs, which insurers, which tech giants are using this type of insurtechs to disrupt the value chain fragmentation of the insurer, it's good that you can go to our report, because in our report you can see real examples, details of that insurtech, why we feel that this insurtech is doing a specific disruption, and it's a good opportunity for you to go deeply on the details that the report is providing to you.
Outstanding work, Carlos.
Thank you, Bruno.
Congratulations. I think we have now a clear idea of the insights of our Insurtech Global Outlook 2021 report. And I would like to invite our audience to visit the website and read the report that Carlos has showcased today. We are at your disposal for any consultation. The presentation of the Insurtech 2021 report has come to an end. But before we went, I wanted to remind you that in the upcoming weeks, we will be releasing conversations around 5 key insights that will be of great interest to the insurance company executives, insurtechs, and other relevant players in our industry. These conversations can be found in the Insurtech website. Thank all of you very much, and see you next year.